Hi, everyone, and welcome back to another show. My name is Tyler, and I'm here with Matt, the founder of ORATS. ORATS is an options analytics platform built on top of over 15 years of historical options data. Our platform is integrated with Tradier, meaning you can research and discover trades on our platform and then seamlessly send them through to your Tradier brokerage account. Today on the show, we're going to talk about using forecasts of volatility to find a trade. Matt, you've been testing a lot of indicators lately in the dashboard. Why don't you tell us some of the stuff you've been working on?
Yeah, we'll definitely get to that. First, I want to get into just a primer on forecasting. Personally, I've been forecasting volatility since I ran a market making shop back in the 1990s and 2000s, Tyler. And
Yeah.
what we had back then was we had um, what we thought were better ways to measure actual volatility. And then when we got that number, we then used it to forecast what we thought volatility was going to be coming up. Because it's one thing to have a good measurement, but it's another thing to try to project that into the future. So we came up with certain statistical ways. Regression, we kind of fell on that. So we have a multiple regression analysis that we use now that is related to what we did back then. So what we try to do is forecast all the parameters of the option skew, and so we utilize things like volatility. So here I have Apple. This is our Outlook page, and our implied volatility. We look at implied volatility trends for our forecast. We also look at relative. This is the Apple implied volatility versus the XLK components. So Apple is high in that component relationship now versus history. So that's one of the things that we'll consider. And we look at historical volatility. That's this kind of magenta line. And we take X earnings out. So we try to forecast a X earnings short-term volatility and then a long-term or infinite volatility, and then we forecast the earnings on top of that. So what tends to happen with stocks is the volatility will slowly rise up until earnings and then come back down, slowly rise until earnings and come back down generally. And so what you want to do is take that earnings effect out of that calculation, so you could isolate what you're forecasting then. So then what we're forecasting is a short-term volatility, X earnings, a long-term volatility, but then you have to forecast earnings and put that in when earnings is going to happen. And so that gives you a pretty good look at the term structure. But then we also have the slope structure of the strikes. So then you have to look at, well, how steep or how flat is the put skew versus the call skew? Are the puts much higher or much lower than the skew? So in this case, we present a graphical look, colorful look at what we think about the Apple term structure volatility skew. And so you can see it's kind of red in the call. So what we would say is the skew might be flatter. The put skew is flatter. So the puts are lower and the calls are higher relatively to what we're forecasting. And so what that presents is an entire surface, and that's how we do that forecasting of the parameters for our big one is our forecast of volatility, Tyler.
Yeah, we get this is one of our the most popular tool in the dashboard, the trade builder. And, we get a lot of questions about this colorful thing on the right there that you see. So like Matt said, I think the simplest way to think about it is red is overvalued and green is undervalued. And so if you're trading volatility, that's kind of how you have to think about over and undervalued volatility. So if it's, say, red and it's overvalued volatility, then you're going to make a different trade than an undervalued volatility. I mean, probably just, long or short Vega at that point, right, Matt? Or is that
Yeah, I mean, it's definitely something to consider, like when you're trading, and you know, and you want to get as many things in your favor as possible. So, like, if you were to click on one of these calls, for example, and then so if you click on the bid on that, then it'll put a sell in there, and so you want to get as many things in your favor as possible. So when you're selling, there's a large forecast edge there. So you're selling at $1.17, and we only have it worth on our forecast of 90 cents. So that's definitely one thing you want to think about when you're trading. Now the smooth edge, that's just what we draw through all the relative strikes. So that's going to be generally much closer to the mid market, whereas the distribution and especially the forecast often will be far away. That's the way we kind of designed it. We're trying to forecast volatility kind of independent of what is out there in the market pricing. The market pricing again is that smooth edge. So that's so that's how we come to this kind of forecast edge, and that's one of the things that you should think about while you're trading, Tyler.
Great. Yeah. Thanks, Matt. Yeah, we use that in the option scanner a lot too. So, what are some of the indicators that we can chart? ORATS has hundreds of proprietary indicators. What are some indicators that we can sort of chart and kind of see what they're doing?
Yeah, I just wanted to follow up on that point that you made about the option scanner, right?
Mhm.
So the option scanner will put a F percent, that's a forecast percent, in here. So this is a long call spread. So that has, a long call and a short call kind of out of the money. So those counteract each other. So the F percentage is quite small. If we were to change this to a long call, so we're probably going to see negative forecast edge, right? Because you're buying something we think is overvalued. So that's how that works. Just quickly in the forecasts of volatility and in the option scanner, Tyler.
Great. Yeah, thanks, Matt. Yeah, option scanner, very useful tool. There's a lot of different metrics you can filter on there and find your trade and then save those scans. I believe we have some template scans that use the F percent. Do we not?
Yeah, definitely do. And
good place to get started quickly is in those templates. So
right.
you can. A lot of them have stock scans in there too.
Yeah,
so that's
right.
nice.
Exactly. So you could what Tyler's talking about there is you can go to the stock scanner and then name these, buy cheap puts on these. You can name them whatever, and then those will often have you'll be looking for stocks, for example, that have a forecast of volatility that makes sense or whatever. And so you could, like I said, go to the stock scanner, and we have templates, but we also have scans that I've saved. When you build these up, and so what you'll want to do is just go buy cheap calls on these, and then one of the ones is ORATS forecast divided by X earnings implied volatility. So that's one of the criteria that you'll want to put in there. Like I also have average option volume. So I want there to be a fair amount of trading going on, and then the slope that has to do, for example, with what we saw in Apple. We want the slope, if we're buying cheap calls, we want the put slope to be steep. So the puts are expensive, and the calls are cheap. So you could set up these stock scans and then have the stock scans send these to the option scanner, and then so now if I have this list of stocks, and then I could then come up with a strategy to buy cheap calls on these types of names, so I could go out of the money, like down, 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 down. So I'm down on the delta. So these are kind of out of the money calls that we're trying to buy on these types of names, and so that's one way to look up. I have too many tight filters that it's and deltas and stuff. So I should have cleared out this before I did that. But anyway, you get a feeling for how to bring that in. So I could choose the stock scan, buy cheap calls on these names. Delta's still there, and then then it populates. So then you could go in and you could say, well, if you're finding calls that you don't like, why, do I like or not like this particular call, and then you could set what the price is or percentages or whatnot. So it's a very powerful option scanner that works with the forecast and many other types of settings that you could use from the stock scanner. So so we've seen that you could use the F percentage in the option scanner, and you could use the forecast in the stock scanner as well, Tyler.
Yeah, great. We're getting a lot of questions about people ask our AI agent Otto about the best indicators to add to a stock scan and for a specific type of strategy. So, if a lot of this is too hard to remember, you can always ask our AI, and it'll kind of help you shape that stock scan with the right indicators and give you some ideas too. So,
should we tease
that.
our new dashboard, Tyler?
I mean, if you want to.
So yeah, one of the things that the new dashboard does is it will find indicators that have statistical significance, and what I'm finding is many of the indicators are these forecasts that we talked about. This is one of the reasons I wanted to do a show, because I'm just finding that our optimizer is working well on certain back tests. So the way the optimizer is set up is you put in a back test, and you have so here's a back test, and you have Microsoft. It's kind of probably hard to see on my laptop here, but let me see if I could zoom out a bit. I didn't do too much there. Anyway, you could zoom out, and you could see which indicators are important and which indicators, when you should get in and when you should get out. So one of the things that you want to look at is what we call a p-value, and a p-value is this number right here, and the lower that is, I think it translates to what is the percentage chance that this back test is just based on random chance. 22 is probably too high. Some people like to get under 5, but I just wanted to point this out because forecasts are important on these indicators. So one of the things that we look at, this is a slightly different forecast. This is a forecast of implied volatility. So there are two things that you could forecast from a volatility standpoint. You could forecast historical volatility, or you could forecast implied volatility. They usually come out similar because IV is trying to basically predict HV, but we have all of these types of indicators, Tyler.
Yeah, it's a great. I mean, we're gonna have a lot more to talk about this tool in the weeks to come,
Yeah,
um, and we're gonna start getting beta testers on it.
yeah,
Starting pretty soon. So if you guys are interested, definitely reach out and let us know. But it's a great place to explore the all the different indicators that we have and how they impact either stock strategies or options back tests. So
right. I also wanted to point out just quickly in the options chain where the forecasts appear. So the orange line through that's the smoothing. So the smoothing will be very close to the actual market. So you may be able to see this, but here's the 205s. The market is $4 at 410, so the midpoint is 405. We have it worth 406 from the smoothing, or what we call the SMV calculation. But you'll notice that the forecast fall of 25.8 creates a theoretical value of 3.82 that's quite a bit lower, and that's what we've seen in Apple. That's why it's slightly yellow or slightly red. That our forecast for Apple is lower than Apple's actual volatility out there. We saw that that its relationship with many of the XLK components is quite high. So a lot of things in Apple right now are pointing to a high volatility. So that's why our forecast is lower than what's in the market, and then how that differs from the SMV, the smoothing, which is generally close to the bid and ask price. And I think importantly, Tyler, is that the forecast, there have been, we've done some studies on forecasts, and it's generally come out to have some edge, but it's still very difficult to trade only on that edge and expect to, have a profitable strategy. But it is, one part of a profitable strategy, and that's where you need something like the optimizer to go in to a back test and say, is this really a statistically meaningful way to identify this edge in this particular back test? So there are a lot of steps. There's no easy button here. And that's why that's why there's over the years that I've been trading, I mean, it's difficult to trade, and there's a lot of competition out there. So you need to have, like I said, everything you can have in your to do everything well that you can, including forecasting volatility, including backtesting strategies, including getting good executions, including knowing when to get out, hopefully from a backtest. So it's difficult to trade, and a lot of these numbers can help traders trade more profitably.
yeah, I mean, people say some people get overwhelmed with all the tools in the dashboard, but you almost have to have all of them because they all play an important role in your research and analysis, and all the indicators, they each play a role. So there's we try to keep it as simple as we can, especially in some of the tools like the back tester. But each one of these indicators and columns that you see is pretty important, and there's no single value or a single theoretical edge that can make you a winning trader. You kind of have to use everything in combination with each other to make an informed decision. So it's understanding everything, and sort of the whole methodology of how it works.
And then finding your niche. I mean, what we want to present is as many ways to find a good trading strategy as possible,
Right.
and have the best data that we can, and that will even the playing field, because that's really who you're competing against, are these big hedge funds and market makers who have tens of people working on this. And in order to compete, you need this good data, and then you need a good niche, and you need to understand where your alpha is coming from.
Yeah. Yeah. Having great data is, that's what we pride ourselves on a lot. We have really good data. We have data for indexes and ETFs as well. So it's not just some of the big symbols. So we have a lot of data on a lot of symbols. So great to
Yeah,
see
and
that.
we're constantly updating those and constantly forecasting too. So it's we're getting it down to minute by minute. Eventually our goal is to we have now we're calculating all this data minute by minute. Eventually we want to be able to back test to that, so that that's kind of some of the things that we're working on at ORATS is now we have what we think is a very good uh, data set, and then we just want to get finer and finer
Yeah.
back tests going, Tyler.
Why don't we show the back tester? It's the updates rolling out. I mean, might even be this week with all the new back tests, right? So we've spent the last few months running like double the amount that we already had. So we had 180 million options back tests. We've had that for about a
Yeah,
year. We just reran all of them and also added even more. So now we're at, what does that say, 339 million? That's insane.
yeah. We've roughly doubled it. We added a bunch more symbols, and we made it faster. So like it used to be when you changed from the default, it would take a minute or two because you're searching through 300 million. But look at how fast it is now. So
Yeah.
it's great. And then so this is really going to be a helpful improvement. And then, like I said, you can now click on one of these backtest finders, and what you're going to be able to do is like, so this is a test that's traded, and you can look at the performance metrics. That's traded. I'll scroll down here. It's in the market 74% of the time. And you could further, or you could find stocks that are more like 90, I don't know, 96% of the time, and then you could use an optimizer. And let's say I want a shorter dated one. I'll put 55 days max. You could use an optimizer, or in very short order, you could use an optimizer in order to, here's 30 delta, to uh, pick the best times to get into this strategy. And often those will be the forecasts that will tell you, hey, listen, you want to get into this when the forecast is going to be the best. So that's what we're coming out with, and that's how our forecasts will interact with our back testing, Tyler.
Yeah, it's really great to see all these new back tests and just how fast the finder is now. So it's an even better experience for you guys to find back tests. And, we think that there's still a place for custom back testing, and we're adding to our custom back tester. But I think the back test finder is becoming a great place to quickly iterate on your ideas. Rather than key whacking in some parameters and then waiting 5 to 10 minutes for a back test. Like, this is so much faster. You very quickly test your ideas and iterate through different strategies super fast. So I mean, I think this is a much better experience, and it's going to be even better when we add the optimizer in here soon. And it's just such a great all-in-one research tool, Matt.
Yeah, no, I agree. And you guys have worked hard. We've worked hard on this, so it's great to see it come to fruition.
Yeah, yeah. um cool. Well, unless there's anything else, Matt, we could end this one a little early.
Yeah, no,
Um,
I think we should wrap it up. That was good.
yeah, great. All right, yeah, we definitely got a lot of stuff to show you guys in the coming weeks with the updates to the dashboard. And if you guys are interested in any of them, we're adding people to the wait list to the beta testing. So just reach out at support@orats.com if you guys are interested in learning more about that. If you guys have any questions, please ask them on the live show. That's where we like to do a lot of the questions for the dashboard. You can also ask our AI chat agent on our website. Otto, he's in the top right corner. Um, Yeah, well, yeah, it was a great show, Matt. Unless there's anything else, we'll see you guys again next week. Thank you, Tradier, for hosting
Thanks,
us.
Tyler.
Mhm.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.